The Redwood Credit Union Visa Platinum Card stands as a remarkably straightforward financial tool that prioritizes consumer savings over the complex fee structures typically found in the banking industry. Starting with the core financial facts, effective as of February 1st, 2026, the purchase annual percentage rate, or APR, ranges from 10.49% to 21%. This variable rate also applies to balance transfers, while the APR for cash advances is slightly higher, ranging from 13.49% to 21%. What is particularly notable about this structure is the interest rate ceiling. While many national banks allow their rates to climb toward 30%, this card caps out at 21%, providing a much lower roof for those who might find themselves carrying a balance during difficult financial times. When looking at the cost of ownership, the absence of common fees is where this card truly shines as a solution for common financial pain points. Most credit cards on the market today penalize users for moving debt or accessing cash, but the Redwood Credit Union Visa Platinum charges a $0 balance transfer fee and a $0 cash advance fee. For someone struggling with high-interest debt on another card, this means the ability to consolidate that debt without the standard 3 to 5% upfront fee that usually eats into the savings of a transfer. Additionally, there is no annual fee and no over-the-limit fee, ensuring that the cost of keeping the card in a wallet remains at $0 regardless of how often it is used. The benefits extend into the penalty structure as well. A major stressor for cardholders is the fear of a single late payment triggering a permanent hike in interest rates. This card explicitly states there is no penalty APR, meaning a late payment will not result in being punished with a massive interest rate increase. Even the fees for late or return payments are significantly lower than industry standards, with late fees capped at $15 and returned payment fees at $22. This creates a much safer buffer for the average user compared to the $40 fees often seen with larger national lenders. On the other side of the coin, there are specific drawbacks to consider based on individual habits. While the 1% foreign transaction fee is lower than the typical 3% charged by others, it still represents a cost for those who travel internationally frequently. For a dedicated traveler, those small percentages can add up over time. Furthermore, because these are variable rates tied to the prime rate, the cost of borrowing can fluctuate based on the economy, even if a person's credit score remains perfect. It is also important to realize that the lowest advertised rate of 10.49% is likely reserved for those with excellent credit scores, meaning those with average credit may find themselves closer to the higher end of the APR range. This card is an ideal fit for someone currently carrying a balance on a high-interest card who wants to save money on interest and fees during a consolidation process. It is also a great match for someone who values a simple, low-fee experience without the constant worry of being nickel and dimed. However, it might not be the right choice for those seeking massive sign-up bonuses or high-value point splashes, as the focus here is clearly on long-term cost reduction rather than short-term rewards. To summarize, the Redwood Credit Union Visa Platinum is a high-value, low-cost option that eliminates many of the most predatory fees in the industry, specifically the balance transfer and cash advance fees. By keeping the maximum APR at 21% and offering a 25-day grace period on purchases, it serves as a grounded and reliable financial companion. However, the primary risks involve the variable nature of the interest rates, which can rise with the market, and the fact that the most competitive rates are strictly dependent on high creditworthiness. Those with lower credit scores might be approved at the higher interest tier, and international users will still face small fees on every transaction made abroad. Always consider that while the lack of a penalty APR is a huge benefit, carrying any balance still incurs interest costs that can grow over time.